listen guys, okay? It's not Palantir, right? It's not something that's 100% revenue year over year. This is something much more different. The market cap is smaller than usual, and I know, stop don't click off, okay? This company actually got some potential. So we have a company, it's called Honest. Now essentially this company was actually launched in 2012, the goal of creating new personal care products. It's a pretty good company, and the thing with this company is that they actually use organic products, so they're using that as like more of a selling point to get more customers. We got a PE ratio of negative. Anyway, let's not look at the valuation right now. But here's the thing, right? Like the CEO, which I'm going to put on the screen right now, she has done a phenomenal job, right? If you guys actually look, oh my gosh, right? Like, you know, I think she came in the company, in January 2023. And like as soon as she came into the company, I mean, she's been doing a full turnaround. I mean, look at this, guys, right? We're looking at operating margin right now, negative 15, when it went all the way up to negative 1.7. Like she clearly has turned this company around, you know what I mean? And like right now, you know, if you guys really take a look at the numbers, I mean, the net income that we're just now hitting net income after years. Like, you know what I mean? So this company is clearly moving up to the upside, which is what I like to see, right? Revenue is clearly going up, not too much, but it is going up at least 5 to 8%. Like 5 to 8% year over year. I mean, it's not really like, you know, it doesn't really get your skin moving, but you know, this company is making progress. And I know in management, they were saying that, you know, they're going to continue to optimize margins. And that is what I want to see, right? They don't have all the three dragons yet, though. You know what I mean? They don't have all the 3 dragons yet, but they are making that curve into profitability, which is what I like. You know what I mean? So that's great. But yeah, I mean, okay, cool. The company is improving its margins. Revenue's growing year over year. It's not really as exciting, right? But I mean, look, they're making really good guidance, right? They're actually telling you in your face, hey, listen, revenue growth, 46% annually, right? The company could definitely do it. They might be able to do like 8%. And I know you guys are wondering like, oh, what about the tariffs? What about the tariffs? The tariffs, my leg, the tariffs. Chill, you got it, right? So look what the company is saying right now for the full year 2025. So like, yeah, I mean, clearly, right, they are uncertain about like how the tariff is going to eat into their bottom line revenue. But regardless of the tariff, I mean, they still expect growth, right? You know what I mean? They're not canceling their guidance. I mean, they clearly see, they know they could at least do 4% to 6%. So here's the thing. What do I think? What do I think? What do I really think, right? So here's the thing. You know, the company is finally profitable. They're profitable. They've been going at this since 2021. You know what I mean? They've been so like, they've just been in the negative. It's crazy, but they're doing a full turnaround. And as the company become more profitable, they'll be able to put more money into marketing, clearly, right? And I would want them to continue putting that money in marketing, because if they do that, guess what? They put more money in marketing. People are on their website. People are buying more products, right? And they can continue to optimize, right? If you guys look right here in 2021, they spend on what? How much they spend on marketing? $54 million in 2021. In 2022, they spent $47 million. And 2023, 36. And then from 2023, they spent $36 million on marketing. Now in 2024, they're spending $45 million. So they're catching up. They clearly see that they have more money to spare, and they put in that extra money in marketing, because obviously we both know you want your companies to put more money in marketing. If they could put more money in marketing, you're clearly going to drive revenue. I really think that this company will be able to hit at least $10 by 2028. Like, you know, and I feel like I'm kind of sandbagging that, right? This company could easily hit $10. And I think currently it's at $5 right now. But you know, 2028, maybe you'll be able to hit 2020 next year, you know, like, I don't know, but I'm just gonna be safe personally and be like, yo, clearly this company can hit it by 2028. As much as this company did, raise funds in the beginning, that's the only way they was able to do this. Like, I think without raising those funds, I mean, this company would be in some shit. I'm not gonna lie, like, you know. But yeah, they were able to raise money, and like, yeah, things are paying off. So yeah, that's what I really think. And yeah, if would I consider this a buy right now? Yeah, sure. I would say like maybe about 1 to 5% of your portfolio. Maybe wait until the next quarter and then start building your positions. I will slowly build my positions, right? When it comes down to like me, for me right now, I'm at least like dedicated like 3% of my portfolio to this stock. It is gonna continue to raise because I am dollar cost averaging on this company, but not by too much, right? I really want to see what this company's gonna do in the upcoming quarters, and yeah, I mean, if I like what I see, revenue growth is going up, I add more. For now, add a little bit here and here, not too much, not too much.